Have you ever wondered what it really takes to, not just get by, but actually thrive in today's financial markets?
Mhm.
We're talking lightning fast, delivering returns that honestly seem almost impossible.
Right.
And what if an AI could just flip a switch,
Hmm.
instantly change its mind, completely reverse course, and still win big?
Yeah.
Today, we're doing a deep dive into exactly that. It's an automated trading system called AlphaCore V4.0.
Hmm.
We're going to look at its recent performance, which is pretty astonishing.
Yeah.
We'll explore its core idea, something they call dynamic discipline,
Interesting term.
and we'll analyze this really nail-biting, real-time strategy pivot that, well, it really puts human decision-making to the test. Our goal, to give you a shortcut, basically. A way to understand this cutting edge of AI in finance, how it thinks, how it adapts, and crucially, how it manages risk when the market just goes haywire.
And for this deep dive, we've got a really fascinating set of sources. Internal reports, live market updates, detailed performance reviews for AlphaCore V 4.0, all dated around September 10th, 2025. It gives us this sort of unprecedented look, almost like a real-time view, under the hood of what really is an institutional-grade AI.
All right, so let's set the scene. AlphaCore V4.0. This isn't just some algorithm, right? It's described as a sophisticated, institutional-grade platform using a specific blend of AI.
Correct.
And the numbers? Well, the recent performance figures, documented over just 18 trading days, that's August 22nd to September 9th, 2025, they're frankly pretty striking.
Oh, what are we talking about?
A staggering plus 251% return.
Wow.
I mean, that's more than tripling your capital in less than a month.
That's huge.
But it's not just about the big gains. The reports also mention 100% capital preservation on defensive days.
Okay, that's key.
Absolutely. For any trader listening, you know that balance between ambition and, well, self-preservation is critical, especially when things get volatile.
Mm-hmm.
Its win rate, for the documented trades anyway, was 79% in week 1, and then it jumped to a perfect 100% in week 2.
100%.
Yeah. So on an initial pot of just $1,000, that worked out to a total return of plus $2,466.74.
Right.
And maybe most impressively, the maximum drawdown was kept incredibly tight, limited by system startups to just negative 1.5% at the portfolio level.
Okay, so very controlled downside.
Exactly.
Yeah.
What does it take for an automated system to pull that off, that kind of disciplined yet explosive performance?
Well, look, these aren't just impressive numbers. They really point to a fundamentally different way of operating.
Right.
That consistent capital preservation, the high win rates, it suggests a kind of risk-off mechanism that, honestly, many human traders, even other sophisticated algos, really struggle to nail consistently. It really speaks to the system's adaptive intelligence, its quantifiable edge, its risk architecture, with dynamic hedging, and critically, execution excellence.
And that execution piece.
Yeah, looking closer at that execution excellence, the foundation here is a 6-engine AI integration.
6-inch.
Imagine combining the power of advanced LLMs like ChatGPT, Claude, Grok, DeepSeek, all working together. Okay. They make signal-based decisions in consensus in under 100 milliseconds.
Wow. Less than 1/10 of a second.
Exactly. And beyond that speed, the system has this proprietary trading edge. It's called the 3-minute VIX collapse arbitrage.
I saw that mentioned.
So this mechanism kicks in when the VIX, the market's fear gauge drops below 15, but only under very specific correlation conditions.
That's the success rate.
Documented as 100% when it occurs, averaging around plus 15% to plus 30% capture per trade.
Okay, a 3-minute VIX collapse arbitrage. It sounds incredibly specific, almost fleeting. Can you break that down a bit? What does that actually mean, and why is it such a unique edge?
Sure. So the VIX, it measures implied volatility, right? Often seen as market fear. When it suddenly collapses very quickly, it can create these tiny, ultra short-term mispricings in certain derivatives. Things that slower systems or humans just can't react to fast enough.
No.
So this 3-minute VIX collapse arbitrage, it's like a window into the market's microstructure. It really shows how this kind of AI can exploit these tiny millisecond level glitches or inefficiencies.
Glitches might be a strong word, but inefficiencies, yeah.
Right. Inefficiencies that are just invisible or simply too fast for almost everyone else. The key insight isn't just the 100% success rate. The fact that these ultra short-term things even exist and can be traded, it sort of reveals this new frontier where speed isn't just helpful, it's everything.
That makes sense. A powerful way to exploit those micro opportunities. But keeping this up day after day, especially when markets are, well, unpredictable?
Hmm.
That suggests there's something deeper going on, a philosophy behind it all.
Exactly.
Which brings us neatly to their core principle.
Right.
AlphaCore V4.0 runs on this idea called dynamic discipline. The system itself describes it as moving away from rigid, hard-coded limits. Instead, it's all about flexible, responsive position management and adaptive sizing. And the reports really zero in on September 10th as the kind of foundational case study for this.
Huh.
So for those of us used to more traditional trading rules, how different is this dynamic discipline?
Oh, it's a pretty big shift. Think of it like a master chess player. They know all the openings, all the strategies, but they're also nimble enough to completely change their game plan mid-match if their opponent does something unexpected.
Okay, I get that analogy.
That's kind of like dynamic discipline. It's not about throwing out the rules. It's about having the intelligence baked in to instantly adapt how those rules get applied when the market changes fast. You're not rigidly locked into a plan that suddenly doesn't fit anymore.
Right, makes sense.
So connecting this to the bigger picture, dynamic discipline means you stick like glue to signal identification. When the system sees a high conviction signal, it acts decisively.
But how it acts can change.
Precisely. How it acts is flexible. For instance, adaptive sizing is key. The reports show it moved from an initial 10% exposure framework up to larger allocations.
Right.
Now, that wasn't breaking the rules. It was responsive position management. It correctly matched its exposure to a market that was showing high momentum.
Okay.
And then there's this idea of convexity capture.
Convexity capture. Sounds technical. Can you break that down for us? Make it a bit more accessible.
Yeah, sure. Think of it like this. Instead of just buying one type of option on, say, TSLA, the system might layer different call options, maybe at the $360 strike, the $362.50, at $375.
Okay, multiple bets.
Kind of. But it's structured. It's not just about making money if the stock goes up. It's designed so that as the price moves higher, the rate at which your profits accelerate actually gets faster, exponentially faster.
Ah, okay. So it amplifies the gains on big moves.
Exactly. It's built to supercharge returns during those really strong parabolic moves, while still having ways to protect capital if things go south. It's a pretty sophisticated way to ride that explosive upside while managing the risk.
So for a trader listening, this means rules are good, but smart, flexible rules that adjust on the fly are better. But making those adjustments, you need to see the signals first, right?
Yeah.
What kind of market intelligence does it use?
Good question.
That's where AlphaCore's cross-asset hierarchy framework fits in. They often call it KC alignment.
PSC, right.
Think of it like the system's internal dashboard. Gives it a whole picture view of market, sentiment, bias, conviction, the whole 9 yards. It's constantly watching 4 key pillars, like instruments in a cockpit.
That's a great analogy. And each asset plays a really distinct, crucial role on that dashboard. First, you've got SPY, the S&P 500 ETF. That's the anchor.
The main guide.
Yeah, the Market Structure Foundation, responsible for maybe 60% of returns, and it's the primary signal for the overall market regime. Is the big picture bullish or bearish? SPY tells you.
Okay, SPY is the anchor. What's next?
Next up is BTC, Bitcoin. It acts as the gatekeeper.
Gatekeeper. How so?
It's the correlation filter. Basically, it's a risk-on, risk-off switch for global sentiment. Bitcoin's moves can sometimes lead broader market risk appetite.
Interesting.
And it even has veto authority on trades if it senses major systemic risk. Plus, it's a key source of edge over the weekend when traditional markets are closed.
Okay, anchor and gatekeeper. SPY and BTC. What else?
Then there's TSLA, Tesla stock, that's the amplifier.
Ah, the convexity engine we talked about.
Exactly. The convexity engine, designed for that explosive upside capture. But it needs strong momentum confirmation, and it often focuses on zero DTE options.
0 days to expiration. Those sound risky.
They are incredibly volatile, high risk, high reward, all within hours. You really need that sub-millisecond precision to trade those effectively. And crucially for TSLA, the system has a key level for bullish amplification. $355.
$355.
On it.
And the last pillar.
Finally, VIX, the volatility index. That's the fragility detector.
Makes sense.
It's the main regime pivot trigger, can activate dynamic hedges, and like we discussed, it signals those arbitrage opportunities during collapses. It's the system's early warning system for turbulence or big market shifts.
So SPY, BTC, TSLA, VIX, anchor, gatekeeper, amplifier, fragility detector. The system's looking for alignment across all 4. Sounds like a delicate dance.
It is.
But what happens when, as you mentioned earlier, one of those dance partners, say TSLA, suddenly decides to go rogue? goes in a totally unexpected direction.
Well, that is the ultimate test of chassis alignment, isn't it? And that's exactly what happened on September 10th. This is where dynamic discipline wasn't just theory anymore. It became a critical, real-time challenge.
Okay, this takes us right into that nail-biting moment, the critical strategy pivot on September 10th, 2025. Let's set the scene. Going into that morning, AlphaCore V4.0 had a bearish view on Tesla.
Right, because it closed the day before at $346.40, below that key $355 level.
Exactly. So the plan was set. A Tesla SEP 12340p, that's a put option, betting on the price going down with a 6% capital allocation. The system decided TSLA was heading lower.
And this is where that processing speed just becomes absolutely critical. At 8 a.m. Eastern, just 90 minutes before the market opens, new pre-market data starts hitting the system.
Okay.
TSLA is already trading at $348.79. Then it climbs higher, $350.20. It's rapidly approaching, even threatening to break that critical $355 threshold.
So the exact opposite of the plan.
Completely. It instantly invalidated the bearish thesis for Tesla. The original plan was just crumbling in real time. You can almost imagine the internal calculations going nuts as the system realized it had less than 90 minutes to make a complete U-turn, a really high stakes.
90 minutes, that's incredible pressure. So what happened next in those frantic moments before the opening bell?
At 8:27 a.m. ET, precisely, the system triggers an emergency protocol execution.
Okay, sounds dramatic.
It was. All bearish Tesla positions got hit with flatenol. Canceled. Gone. Total capital exposure was also adjusted. Risk adjust 10%. Pulled back from 13% because of, well, pivot uncertainty. Things were moving fast.
Right. Smart move.
Then, incredibly quickly, the system flips its bias, shifts to a new bullish outlook for TSLA. Started preparing for a SEP 19355C, a call option entry.
So not just tweaking, a full 180-degree reversal.
A complete reversal. And this pivot wasn't just about one stock trade. It completely changed the sector key alignment picture.
Oh, so?
What was initially 34 bullish, with Tesla being the missing bullish piece, remember?
Yeah.
It suddenly shifted to potential 44 bullish developing.
Ah, okay. Full alignment potentially coming online.
Exactly. This dramatically boosted the system's overall conviction, and its amplification potential for returns got cranked up to 2.0x. It saw the market shifting, and it shifted right along with it, instantly.
And the outcome of all this drama, despite that huge reversal just before the open.
Well, the results for that session were pretty impressive. The system hit a 100% win rate across 8 positions.
8 for 8 after that pivot.
Yeah. With realized gains somewhere between plus $531 and plus $544 for the day.
That's remarkable adaptability. But how does an AI manage such a rapid, high-stakes shift while keeping the risks buttoned down? That must mean there's a serious risk management framework underneath all this.
Absolutely.
Yeah, this brings us to AlphaCore's risk management system. It's built on something they call the Dynamic Operational Trading Architecture System, or DOTIS V2.0.
DOTIS V2.0, right.
And it showed incredible resilience, didn't it? Especially during that really volatile pivot. It sounds like a complex balancing act.
It absolutely is. And even with this dynamic discipline philosophy, there were still rigorous protocols being followed during that high-stakes shift.
Like what?
Well, for example, the system deliberately reduced total exposure down to 10%. It held a 90% cash reserve specifically during that period of pivot uncertainty.
I wasn't reckless.
No, not at all. It was smart capital deployment under stress. It also automatically implemented tighter stop losses, set them at $2 or $3 below entry instead of the usual $5 because it recognized the increased gap risk from those pre-market moves.
Okay.
And critically, volume confirmation was mandatory for any new entries. It needed to see real participation over 8 million shares traded for TSLA, over 10 million for SPY before jumping in.
Makes sense. Avoid false signals.
Exactly. And no pre-market entries were allowed, specifically to avoid getting caught by low liquidity head fakes.
Got it. Beyond those immediate actions, what about safety nets?
Yeah, there are several non-negotiable safety nets. They call them kill switch protocols.
Kill switches.
For instance, if SPY suddenly tanks below $640, or if the VIX spikes above 18, or maybe if the system's own overall portfolio drawdown hits 1.5%.
Then what?
Then it's designed to flatten all positions immediately. No questions asked. These are hard lines in the sand, even for a system that's built to be dynamic.
Okay, that makes sense. Now, there's this other feature mentioned, the revolutionary reset protocol. This sounds really interesting. Can you walk us through how it handles profits and why this idea of extracting gains and restarting is considered innovative?
Yeah, this is where the system's long-term thinking really shines. It's quite clever. When the capital, starting from $1,000, reaches $10,000.
Okay, a 10x gain.
Right. The system automatically extracts $9,000 of that profit, sends it to secure Bitcoin storage, and then it restarts the trading book with a fresh $1,000 base capital.
Huh. So it banks the profit and starts over. Why?
The innovation here is pretty profound. It's designed explicitly to preserve optimal position sizing and, crucially, prevent scale decay.
Scale decay.
Yeah, it's a common problem. As an algorithm's capital base grows, it often struggles to maintain its edge. Why? Because placing larger trades can actually move the market against you, or you run into liquidity issues you can't get in or out quickly enough at your desired price.
Ah, I see. Too big to be nimble.
Exactly. By periodically resetting to that base $1,000, the system avoids this scaling problem. It ensures its position sizing stays perfectly calibrated for the specific market edge it's exploiting, no matter how much profit it's already generated. It's, frankly, a genius mechanism to try and ensure sustained high performance over the long run.
That is a clever way to tackle a common algo trading issue. But the reports aren't all glowing, right? They mentioned some self-identified risk management concerns after this successful September 10th pivot. What were those concerns about, and how serious are these lottery ticket scenarios it mentioned?
That's a really critical point, and it says a lot about the system's self-awareness.
Mm-hmm.
Because yes, the pivot on Sept 10th was a success, no doubt. But the internal post-session analysis flagged concerns about position sizing elasticity. Meaning, it felt it might have stretched its sizing rules a bit too much in the heat of the moment. Specifically, it noted that some deep out-of-the-money positions created lottery ticket scenarios.
Lottery tickets. Like long shots?
Pretty much. Some of the options chosen during that rapid pivot were so far from the current stock price that their statistical probability of actually expiring in the money was very low. Highly speculative.
Okay.
Now, they happened to pay off big this time because TSLA moved so strongly, but the system itself recognized this wasn't ideal strategy, that it was a potential vulnerability. It highlights that continuous refinement is needed even for a system with dynamic discipline. It's not perfect, but crucially, it seems designed to learn from its own close calls or imperfections.
Fascinating. So even with all this AI power, there's this constant push and pull, isn't there, between aggressive adaptation and sticking to or refining strict boundaries.
Absolutely. It's an ongoing process.
Okay, let's shift gears slightly and talk about AlphaCore's sheer competitive edge.
Yeah.
We've touched on the six-engine AI integration, those advanced LLMs making sub-millisecond decisions. How does that raw speed really give it an advantage over, say, sophisticated traditional hedge funds or even other algo trading firms?
Well, this combination of speed and AI working together isn't just, nice to have. It's a fundamental game changer.
Right.
The reports state it achieves market regime detection in under 5 minutes. It can execute a full strategy pivot, like the one we discussed, in less than 15 minutes, and establish the new positions required in under 30 minutes.
That's incredibly fast compared to human analysis.
Exactly. Where a human trader might take hours, maybe even days, to fully absorb market shifts and replan, and a traditional algo might take several minutes just to reoptimize. AlphaCore's sub-millisecond decision cycle means it can spot and exploit those fleeting inefficiencies we talked about, the ones that simply don't exist on the timescale most others operate on.
So it's not just faster, it's operating in a different dimension almost.
That's a good way to put it, a completely different temporal dimension of the market. That's how it differentiates itself. It really is a unrivaled adaptability in that sense.
Now, here's something I found really intriguing. Even with all this sophistication, all this speed, the system's own reports flag things like significant discrepancies identified in key data points, like SPY's RSI readings or trading volume figures. It's almost like the system is second-guessing its own inputs. What does that tell us?
It's actually a really profound aspect of its design, I think, that inherent self-awareness, where it explicitly identifies and flags potential data issues and even recommends independent verification.
Yeah.
It underscores a pretty fundamental principle. Even with the most advanced AI, critical thinking and data integrity are still paramount. It seems like it's built not just to learn, but also to constantly audit its own inputs and outputs.
Oh, it knows it might be wrong sometimes.
Right. It knows it can make mistakes or more likely receive imperfect data. And it's built to question itself. That self-skepticism, if you will, is a powerful differentiator in the often overconfident world of AI. It seems designed for transparency, even about its own potential flaws.
Okay, so you got this high performance, this adaptive philosophy, this speed edge, even self-awareness. What's the investment thesis then? How is AlphaCore V4.0 viewed from that perspective?
Yeah.
The reports mention a valuation of 1218 meters pre-audit, projecting 2050 meters post-audit.
Well, a critical step for any investment like this is external validation, right?
Sure. Proof it actually works.
And AlphaCore seems to have cleared that hurdle. A third-party audit was completed. It verified the system's reported returns. That plus 247% figure is mentioned in connection with the audit, and it also validated the underlying architecture.
So that lowers the risk for investors.
Exactly. The report says the audit de-risked the investment thesis significantly. So the focus now really shifts to leveraging that credibility moving forward.
And given everything we've heard, it's probably not surprising the sources recommend a strong buy invest. But they also highlight a time-sensitive opportunity, only 6-12 months before either the edge degrades or competitors emerge. That sounds like a pretty tight window. What does that mean for actually unlocking the system's value?
Yeah, connecting this to the bigger picture, that audit provides the crucial green light, the credibility to really move into a serious capital deployment phase.
Scaling up.
Right, scaling with much larger capital, pursuing institutional money, that kind of thing. But that time-sensitive opportunity warning, it isn't just hype. It really underscores how intense and fast-moving this sector is. It's almost winner-take-all.
So they need to move fast.
They absolutely do. To really capitalize, AlphaCore needs to transition quickly from being this validated, impressive proof of concept to deploying significant capital at scale. Lock in those institutional opportunities before competitors can reverse engineer something similar, or before the market itself adapts and potentially erodes that unique edge they currently have. It really is a sprint to capture value and establish themselves as a leader.
So today, we really pulled back the curtain on AlphaCore V4.0. We saw its, well, truly astounding performance figures, explored its revolutionary dynamic discipline philosophy, and walked through how it executed that flawless, yet incredibly risky 180-degree pivot in real time. We saw how this blend of advanced AI, that sophisticated CASI alignment framework, and rigorous, though adaptive risk management, created a system that could navigate intense volatility with just incredible success. And importantly, it has that self-correction mechanism built in.
Yeah, this deep dive really gave you, the listener, a unique look at how cutting-edge AI can process vast amounts of information, pick out those critical signals, and then execute really complex strategies with speed and adaptability that are just unparalleled right now.
Right.
It's a powerful example of how technology isn't just helping out in finance anymore. It's fundamentally redrawing the lines of what's even possible, setting completely new benchmarks for both performance and resilience.
Which really leaves us with a big question, doesn't it? As systems like AlphaCore V4.0 keep pushing the boundaries, becoming more dynamically disciplined, capable of pivoting entire strategies in minutes, what does this mean for the future of decision-making? Can human intuition even keep pace? Or will our own dynamic discipline, our ability to adapt, need to evolve in totally new ways? Ways to work alongside, or maybe even compete with, these incredibly intelligent machines. It really makes you wonder, how will we adapt when the game itself changes this fast?